The recent amendments to taxation of debt funds has delivered an unexpected blow to mutual fund investors, with inflation indexation benefit granted to long-term investors in debt mutual funds being removed. My colleague Sakshi Batra spoke to Balasubramanian, MD and CEO Aditya, Birla, SunLife AMC and Chairman AMFI to find out what this means for the debt mutual fund investors and the industry.
It's been a very, very eventful last weekend for you, and I'm sure especially for you, your phone wouldn't have stopped ringing. For a whole lot of people would have been wanting to understand from you the impact of all of this. So I wanted to take first your reaction. What was your first thought when you heard about this amendment in the finance bill? And as per your understanding, how will this really change life for AMCs at large, and what will be the impact of this on the total assets under management for AMCs?
Yeah, no, thanks Sakshi for having part of the show today. I think first reaction as we came to know on Thursday night that there's an amendment that is being now introduced in the finance bill. Of course, all of us were taken aback and surprised that how come this has all of a sudden has come when it was not being part of the budgetary provisions. And then of course we try to understand what is the background from which it has come, and is there anything that can be done by way of making representation through AMFI as well as SIB. While that's an effort that we are immediately getting into action in terms of what we can do. But having said that, then as the amendment got passed in the parliament, then actually we have to make an assumption that that the amendment has now become final, and therefore we have to live with for the time being what has been presented. I think what came as a surprise is given the fact that Indian mutual fund industry have been growing at a very steady state of growth, and having close to about 16 lakh crores coming in the fixed income out of the 40 lakh crore that Indian industry has been managing. And the mutual fund also been playing the role of one, channelizing the savings into the capital market, both in equity as well as in fixed income. At the same time, provides a greater depth to the corporate bond market in the country. And we have been a provider of another source of financing for most of the company needs, and we have been doing. Therefore, these taxations introduction was a bit surprise for us, given the fact that the role that we are playing actually benefit both investors on the one side and the capital market on the other side, and third is the corporate bond market development on the other side. Therefore, we are a bit surprised, but anyway, government has gone by that assumption that we need to have a uniform taxations across all products, across all industry players. I think probably the finance minister has been living up to the the effort that she is taking for simplified tax structure. So going by that, I think they seems to have taken it in the final bill when they were getting amended.
Right. So are you hopeful for a review, or do we have to live with this for the time being now?
I think the way I assume is unless there is a provision that they can that they can use it for reversing what they have done, but it looks doubtful to me given the fact that it got passed in the parliament. Anything that got passed in the parliament, I would assume that become sacrosanct. If at all it has to get reviewed, probably it can get reviewed the subsequent budget. So I assume unless the actually whatever the representation, that noise that has been made by all the industry players and including regulator giving some kind of data points on various things. If it makes their mind change a bit, then we are going to be surprised.
How should a fresh investments be taken from FY24 in terms of the debt or fixed income instruments? What would you advise to the conservative investors out there?
See, I think conservative investors, those who come in the low tax bracket, they can of course continue to be in the FD, and given the fact that gives them some bit of guaranteed return, and there's element of safety which they always consider. And those who come in the higher tax bracket, and those who have high income income tax payers, definitely mutual fund would still be a better option, given the fact they do get short-term capital tax benefit, can be adjusted against the short-term capital loss. And everybody thinks actually they only make profit all the time to pay tax. People also make losses actually in their investment, as we have seen recently, the equity market volatility. So therefore, it's always better to have that options with them. And naturally, from SMEs and corporate investors' point of view, I think mutual fund will continue to remain a vehicle, but they don't actually come for LTC benefit. They always come for parking their money as a better alternate to any other investment that they have. I think that segment I think will continue.
If you like the video, do like, comment, share and subscribe.